So winning 10 million bucks, you can stretch that pretty far. How are you planning on investing it?
Yeah, and I think that's the ultimate goal is how do I make it work for my family and how do I make it work so I can continue to invest into research? Kind of first things first, like just as Jimmy wired me 10 million, I wired a great chunk of that over to a financial institution to kind of get it to work. And right now it's kind of sitting in kind of some treasury ETFs as I figure out kind of where I'm going to put it. But it's like, this opens up a whole new world for me because I'm now a qualified purchaser. It's like structured products, different different private investments that I would never have had access to. So there's different things I want to do to make sure my family's taken care of over the long term. We got to look at kind of PPLI. We have to look at long-term care insurance, like making sure we do things so our kids don't have to care for us. But also like, how do I make sure that we're funding the research we need to? How do we stretch those dollars? So making donations this year, setting up a donor advised fund to continue to invest over the years and hopefully into great investments so those dollars grow. It's a great problem to have, but it's a little overwhelming. So I have a great team of people who I know and trust who are helping me. And the ultimate goal is to stretch these dollars to continue to make an impact on my family and other families like ours.
Yeah, it seems like all the fancy stuff, like if people try to pitch you like, oh, I got this great fund and this and that, like
It's just distractions.
it usually is. It's usually the really simple approach of like, hey, 70% US equities, 20% international, 10% treasuries / cash tends to be the safest and like long-term does really well.
Yeah, and my wife is more conservative. I'm more, when it comes to investing, I'll specialize. Like, when I look at my IRAs, it's like my Roth and my traditional, I own 3 stocks in it. And that's it. You probably would.
What stocks?
Tesla. I own MicroStrategy and I own Coinbase. Very risky.
How long have you owned those?
A while. So I've had a good run.
Those are insane stocks to own recently.
Yeah, so I've had a good run on those. And for me, especially being in my IRA, it's like I can be a little more risky, at least how I do it. And then, so this other stuff, I'll be a little bit more conservative and take my wife's approach and kind of your approach and just make sure these dollars stretch.
Wow. Don't tell Jack whatever you're investing in because as soon as he buys it, it's going to go down.
No way.
Every single time.
It's bad
It's
recently too, because
do
you remember how I was like, oh, I have way too big of a cash position right now, like I need to buy stocks. So I created a whole new, I use M1 Finance, at least right now, I won't forever. I created this new account within my M1 account and it was called my VUG account. It's my growth stock. It's like an index fund basically. Put a bunch in there. I was averaging into that. I've been doing that now for like probably about a year. And then I realized my cash position's too big, so I started really putting money into it.
I remember you telling me about
dumping
this
money
at
into
the
it.
end of the year when the market was at its
at
peak.
the end of the year. And I'm overall down so much in that account. And it's an index fund because I just bought it the wrong time. And I've had it for over a year. I just I did small investments while it was obviously just skyrocketing. And then right at the peak is when I just unloaded into it and I'm down so much.
Isn't it crazy how it works out? I mean,
but it's consistent.
It's not working out.
But
this isn't a
one-time
What do you mean
thing.
It's crazy how it all works out.
Well, hey, but
It's doing the exact opposite.
But you got to hold it.
Oh, well, yeah. I mean, I don't let it keep me up at night. In every day that the market's down, I'm like, well, my averaging in, because I don't even have enough money now to continue bulk investing like I was. So
that's the worst.
But this has been going on for years. I mean, this has been since 2020 or 2021. Everything.
And you know what's crazy?
Are you your generation's Jim Cramer?
I think I am, because also I built up this Robinhood account, and I've talked about it on this podcast before, and I built it from I think it was 22 grand all the way to 75. The best investment that I made was Dogecoin, and I turned $100 into just shy of $17,000. And then I parlayed that into basically everything was call options on Robinhood and Palantir. And then that was when they started plummeting. And so I got margin called and I was forced to sell my call options on these. So I couldn't hold on to them anymore. And that's leveraged positions. Yeah. And guess what's happened to Robinhood and Palantir recently?
Crushing it.
They're crushing it. But guess what happened to me? I had to give away my shares because I got margin called on that account.
So it's short-term calls?
It was long. So I maxed it out in terms of the time. So I think it was a year and a half.
Margin.
And so I don't know what it is, but especially with the recent purchases of the index funds, it's crazy as soon as I start loading in.
Yeah.
Because I've had it for over a year, but I'm still down.
So you're a big Tesla fan.
Yes.
Are you getting long options on Tesla?
Yeah, but the thing is, it's like the heavier I go into something, usually the worse it performs. And I haven't gone incredibly heavy into Tesla. So it's one of my smaller positions.
Exactly.
It's still okay. I was pissed on Robinhood because I was investing in Robinhood and Jack saw me buy Robinhood stock and he's like, oh, I'm going to buy some of that too.
Like
immediately the next day,
I would
down.
have hundreds of thousands of dollars right now in my Robinhood account because of Robinhood stock and Palantir, because they've just been going like hundreds of thousands of dollars.
But here's how bad it is. There was a day where Robinhood just kept going down. It was down like 80%. And I go to Jack. I'm like, I'll pay you to sell your stock. And he's really stubborn. He said, no, like, come on, there's got to be a price. I could pay you. Guess what? We come up with a price. He sells his Robinhood stock. The next day, it's up 10%.
So when you read those financial questionnaires to kind of figure out your risk profile, it's like, if you lost more than X%, do you buy more? Do you hold? Do you sell? You're the one who sells?
No. Like I do the right thing now, at least. After that whole, Palantir and Robinhood fiasco, I now do the right thing. I'm dollar cost averaging into index funds. That's everything. That's all I've ever done now since that incident. But still, it doesn't matter.
There was another one that was really funny. A buddy was talking about what he was invested in. Jack's like,
we're not.
I'm going to go into that too. He buys into it, and this person is always
my buddy
like,
didn't know that I bought into it.
But he's always right on the money, very smart, and he's got into like certain things before they've taken off. Like his track record is fantastic. So Jack knows this. Is like, well, if his track record's like basically 100%, I'm pretty safe buying into this. How is that doing?
I had to sell because I bought calls on it, so I just leveraged positions and basically lost everything. But it wasn't.
I love how so conservative you are to dollar cost average into index funds, but you're doing leverage calls.
Well, the thing is, like, I did that with like an account with $2,000 in it, but I do have like my daily auto invest, which is more like not more than. But it's a substantial amount that I'm investing every day into.
I love that you DCA every day. That's great.
Yeah. A lot of people do it every week. I prefer to do it every day. Graham's a weirdo and he likes to manually do it every day. But I recommend it to a lot of my friends.
We have a few friends who we know when they buy into something, it's the peak. And so with Bitcoin, we have one friend in particular that's like, no, I'm not going near that. And we know, okay, when that person buys in, we sell.
Yeah.
We have to, because that's the peak.
Yeah.
Like, I was always a little bit skeptical. Well, Graham is very, what do you call that word? That word? When
optimistic.
No, it's not optimistic. It's when you don't want to walk under a ladder.
Superstitious.
Yeah, Graham's very superstitious. So he starts connecting the dots with a lot of things. And I am exactly the opposite. And he brought this to me, this whole Jack trading, Jack inverse trading thing. And I'm like, I don't believe it. Recently, it's really hard to ignore with the index fund thing.
Well, it's so funny. I forget who you had on the show, but he talks about like knowledge parity. Where it's
Chris Camillo,
which I loved. And it's like to be able to spot these trends. But once you it's like your friend, like once he starts talking about it, okay, it's time to get out. Like if he's getting in, we get out.
So we got a good group of friends, diverse enough where I know if this person buys this, sell. If this person sells that, buy.
I love it.
Just between them, I think we got the markets covered.
That's so good.
But Jack is like the ultimate bellwether of like buy or sell, like the greed fear index.
I think it's the Jack of the past. I think 2025 and beyond is going to be.
I think I just need to make more Dogecoin investments.
No, honestly,
super.
You could make a lot of money. Just people pay you just to know how much you're investing in the market and what you're buying, so they could do the opposite of that.
Yeah, but if they're paying me for it, then like the universe would want to minimize the amount of gain that I possibly have. So if they're paying me for it, then like the first couple trades I would do would be successful, but to a very small degree, to where everyone's like refunding their money to me, and then I would start. Yeah, that's what I think. But no, index funds, they've been overall. I'm positive, but way less than I probably should be.
Well, and especially at your age, your timeline is so you got a long timeline.
Yeah. So good to know that you have some plans to mitigate your tax implications. And that's going to be pretty brutal when you end up paying that.
Yeah, and we'll have to report back whether we have this amazing new realtor in Northern California we got a great commercial property. So I'll have to see if that.
Good. Yeah, keep posting videos. I think that would be really important, and do more appearances. I think the more awareness you raise, especially now because you have I think a few months now where you could really maximize everything before people are like, oh, I've seen the show already. I don't need to watch it again.
Yeah, old news.
But you got
season 2 is coming out. Yeah.
Exactly. I think you got 3 months where you could really make the most of it. And so I would.